Hello, ladies and gentlemen. A huge welcome back to everyone to the special weekend edition of Markets Around the World. My name is K2, and as usual, we'll be covering everything from the latest data and macro news stories to the key levels you need to be watching. If you love markets like we do, remember to subscribe and educate yourself better about how these markets actually work together. I want to apologize for not uploading any videos last week. I was sick, and I hope you guys forgive me. But I promise this video will make a difference and is worth watching. So, let's talk about what happened in the market and the outlook too. Let's expand the conversation, starting with the news. A dark day in U.S. history offered a test for financial market participants Sunday night, as investors reacted to an apparent assassination attempt on former President Donald Trump. The event so far hasn't sparked a flight to typical safe haven investments such as treasuries and gold. Instead, it could see investors focus on perceptions around how the Saturday shooting at a Pennsylvania campaign rally will affect the race between Trump and President Joe Biden. The initial market reaction, however, was subdued, with U.S. stock index futures trading flat to slightly higher Sunday night. Hopefully he will recover soon, and we will pray for him. Signs of easing inflation are giving the U.S. central bank the go-ahead to do something investors have waited for all year. The first interest rate cut since the most aggressive rate hiking cycle of the past 4 decades began in March 2022. The seemingly impossible task ahead for the Federal Reserve and Chairman Jerome Powell is to achieve a decisive victory against inflation without pushing the world's largest economy into a recession, or at the very least, avoiding a deep and prolonged one. U.S. small-cap stocks look poised to take off in the second half of 2024 after a mostly lackluster start to the year. Many investors this week dumped mega-cap technology stocks and turned to roughed-up corners of the market after new data signaling cooling inflation-fueled bets that the Federal Reserve will begin to cut interest rates this fall. Market strategists told MarketWatch that the rare outperformance of small-cap stocks versus the broader market suggests a natural rotation into the lagging sector. Investors are seeking bargains after the S&P 500 scored record highs, rather than betting on the potential for more rate cuts this year or a robust U.S. economy. Bitcoin, which trades around the clock, surged after former President Donald Trump was shot. This is potentially a reaction both to the perceived increased likelihood that the Republican will win November's presidential election, as well as to a more unstable political environment. I want to congratulate Spain for winning again. Spain is the king of European soccer for a record 4th time. For England, it's another agonizing near miss in the team's decades-long tale of underachievement. Let's expand the conversation, and I want to show you some economic data. We begin with U.S. temporary help services jobs have seen negative growth for 20 straight months, the longest streak since the 2008 financial crisis. Temporary help services employment is considered a leading indicator for the entire economy's employment. Over the last 30 years, such a long streak of declines has only happened during a deep economic downturn. Since March 2022, employment in this sector has plummeted by 515,000 jobs to the current 2.67 million. In June alone, temporary help services jobs dropped by 8%, the most since the 2020 pandemic. This is another sign of a weakening labor market. How did different commodities perform in the first half of 2024? Coffee prices saw the largest year-to-date gain, rising 21%, followed by silver with a gain of 19%. The third and fourth best performers were WTI crude oil and gasoline, rising by 13% and 12%, respectively, fueling additional inflationary pressure. On the other hand, corn, wheat, and soybeans have declined the most, by 18%, 12%, and 11%, respectively. Overall, the Bloomberg Commodity Index gained 6% in the first half of 2024. Commodities continue to fuel inflation. Another dot-com bubble similarity. The S&P 500 has outperformed the equal-weighted S&P 500 by 13.4 percentage points over the last 6 months, the most since the 2000 dot-com bubble. This is also the second largest outperformance ever recorded over a 6-month period. Since 2020, the S&P 500 has rallied by approximately 90%, while the equal-weighted index is up about 50%. As a result, the ratio between the two indices has spiked to its highest level since the 2008 financial crisis. A similar trend is seen in tech stocks, where the Nasdaq 100 has gained 22% this year, while the equal-weighted Nasdaq 100 is up just 6%. Big tech stocks are all that matters. Annualized interest payments on U.S. federal debt have just reached an all-time high of $1.14 trillion. This amount is more than double the interest recorded in 2022 when the Fed started raising rates. To put this into perspective, even during the 2008 financial crisis, annual interest costs were approximately $450 billion, which is 60% lower. As a percentage of GDP, net interest costs this year are on track to exceed the high of 3.2% seen in the 1980s. By comparison, during World War II, net interest expense as a percentage of GDP was much lower, at 1.8%. The U.S. government needs lower interest rates more than ever. Let's expand the conversation and see what's going on. Microsoft is down 3% for the week. Nvidia saw a gain of 2.7% and was up almost 6% for the week. Google and Amazon both saw declines of 2.7%. Meta and Netflix had a brutal sell-off, down 7%. In the sectors, healthcare and real estate were in the green, as well as the utilities, XLU, and materials, XLB sectors. This is the latest update for the Fear and Greed Index, which is now at 56, indicating that greed is entering the market. Will we see extreme greed this week? These are the most anticipated earnings releases this week. These are the ones I will be watching closely. If you need to pause the video, take a look. Let's expand the conversation and look at some charts. We'll start with the 4-hour chart of SPI. The new high suggests that the bulls are winning this battle. As long as this trend line holds, there's no need to short this market. However, as the market continues to make higher highs, the momentum indicator shows increasing weakness. Next, let's examine the 4-hour chart of QQQ. More weakness is anticipated as we approach earnings. I expect downside for QQQ this week, followed by a bounce back. On the weekly chart of IWM, after 2 years, the bulls are winning the battle with IWM making a new high. I anticipate further upside for IWM, especially with the potential for a rate cut in the September Fed meeting. Let's review the key events for this week. On Monday, we have Goldman Sachs earnings, NY Fed manufacturing survey, and a speech from Fed Chair Powell. Tuesday brings Bank of America, Morgan Stanley, and United Health earnings, along with U.S. retail sales. Wednesday includes United Airlines, Johnson & Johnson, and ASML earnings, along with the Fed Beige Book. Thursday features Taiwan semiconductor earnings, initial jobless claims, the Philly Fed manufacturing survey, and Netflix earnings. Finally, on Friday, we'll see American Express earnings. All right, ladies and gentlemen, that wraps up this weekend's video. If you found value in this content, please like and subscribe. If you have any questions, please leave them in the comments below, and I'll get back to you as soon as possible. Thank you for watching, and I'll see you next week. Bye for now.